Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, June 14th, 2011. This morning I'm talking about Chinese growth is steady. And, overnight, going into the overnight session, we basically had two major pieces of news that the market was considering, which, presented a little bit of risk out there for, the global economy and for the markets in general. And that piece of news was basically what was going on in China with the Chinese CPI index that was due out. They were expecting to show that inflation grew at 5.5%, and the actual figure came in exactly at that, 5.5%. So that was seen as a good thing because inflation wasn't hotter than expected. The major problem that everybody was sort of anticipating was that perhaps inflation was going to come in higher in China. Right? That means that the Chinese government was going to have to raise interest rates to try and slow down the inflation. It means they're going to have to slow their growth, and if China slows their growth, that's going to affect everybody else, from Australia and New Zealand, who export raw materials to them, to just about everybody else. Because right now, China is, the fastest growing economy in the globe. So, right now, the global economy is basically being driven by Chinese growth. So, any slowdown there would have had a major effect. And considering that we're seeing slowdowns here in the U.S. And in Europe, this, was a good thing. So we sort of dodged a bullet there with China. And you can see up overnight, Aussie dollar moved up higher. All right, we've got the Kiwi. Kiwi's also a little bit higher. And that you have to consider, despite the earthquake that they just had the other day. So, it looks like that they've been able to, withstand the blow, if you will, in New Zealand for now. But, that is going to affect the interest rate hike going forward. So, New Zealand getting back some of the gains from that loss off from the earthquake the other day. All right, the other piece of news we were looking at was coming out of the UK, and it was the UK CPI report. All right, inflation actually grew in the UK at 4.5%, which was as expected. Okay, 4.5% we know is very high, but the BOE is going with the plan here that government austerity, lack of spending, is going to bring prices down. Right now, it sort of hasn't been happening. It's sort of been sitting there right at these levels. The core CPI actually came in just a little bit lower, 3.3% versus 3.5%, so that's decent. But the headline figure, 4.5%, is steady there. That was as expected, but it doesn't look like that's going to cause the BOE to act. All right, they also had retail price index came in just about as expected as well. All right, but home prices are starting to fall over there a little bit, so you don't have a lot of demand for homes, big ticket purchases, so they may get a little bit of relief there. But right now, the BOE doesn't plan on doing anything about this, seemingly. Until something crops up that really makes them move here. So they're going to live with the inflation. They're going to let it slowly decline, but they're probably headed towards a little bit of stagflation. And we're going to see what happens there because, the UK doesn't have a ton of control over the inflation in their own country, especially if they're not going to do anything about monetary policy, all right? They're basically riding the coattails of U.S. monetary policy, which affects price of oil, price of gas, all of these other things. So if they're not going to do anything about rates over there, then they're, pretty much committed to allowing the lack of government spending and the austerity there to hopefully decrease demand and get prices down. But I don't think that's going to happen. It's just going to be a slow, stagnating move, inching lower if it does at all. All right, so take a look at the euro. Euro yesterday, all right, Moody's, or was it S&P? S&P came out and they lowered the rating on Greece. Okay, they took Greece down from a B rating to a CCC, which essentially is the lowest rating you can get. So I think there's only one country out there that's got a lower debt rating than Greece, and I think it's Ecuador or some other banana republic that's out there. But not every country's got their debt rated, but of the ones who do, Greece is essentially at the bottom of the barrel. But nevertheless, the euro kind of shook that news off. You can see here, still pushing a little bit higher, getting back towards that 145 level. And, the anticipation is that they're going to get this problem figured out. They're not going to let Greece default. And, that sounds great. But, so far, it's been tough sledding, in these meetings and what people would like done. So, the question is how this thing's going to come together, who's going to bend first, and what that's going to mean. So it's interesting, but by and large, the sentiment is that they're not going to let Greece go. So let's move on with it. So Euro moving higher. No other real news out of Eurozone this morning. All right, let's see, yen. Let's talk about yen here real quick. Okay, overnight, Bank of Japan had their interest rate decision. They left all policy unchanged. All right, 0 to 0.1% on the interest. Okay, and they left the asset purchase plans intact and at the same levels, and that was a little bit disappointing to some. Some, I think, were expecting that Bank of Japan may step up and try and induce some monetary easing to try and help recover from this earthquake. But they're actually saying that companies are actually doing it on their own. They're getting their supply chains back. They're actually it's sort of like they're moving a little bit harder, a little bit more output. And he's saying that the Japanese economy may surprise next time. So sounds like a good story. We're gonna have to see what happens there. But you can see that the yen strengthened just a little bit versus USD there for a little while. To show you the Swiss franc here real quick, dollar Swissy. Swiss franc's a little bit lower. They had the report came out, the SECO report for the economic forecast, and that was lowered, okay, based on reduced exports due to Swiss franc strength. So stronger franc is hurting them in Switzerland. All right, so it doesn't look like they're going to be making a move on interest rates anytime soon to help push the franc higher. So that's what's going on with Swissy. All right, and lastly, we've got later this morning, we've got U.S. advanced retail sales figures coming out at 8:30 a.m., as well as some PPI index figures as well. And we're going to have to see, what happens with those sales, because we're expecting that the advanced retail sales are going to come in at negative 0.5, so they're looking for a major reduction. So anything that's better than that is going to be seen as a good thing. But right now, they've set the bar fairly low with a negative number. And we'll see if the U.S. economy can't break through that, because, as we know, the U.S. Consumer represents some 70% of U.S. GDP. So looks like we dodged bullets overnight. Economic data from China was good, not overly good, not overly bad. It was like the porridge, it was just right. So that's a good thing for the markets. Means that everything can kind of continue along as is. So that's what I'm looking at for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.